The war in Iran, oil prices skyrocketing, inflation getting out of control. What does the next 6 months look like? Well, we brought in Tom Siomades, who is a chief market economist, to help us think through what could possibly be coming our way and to kind of summarize what we've been through so far here in 2026. It's a fantastic, informative episode. Listen all the way through. We hope you've been enjoying all the episodes from the Secure Your Retirement podcast. If you'd like to keep learning and receiving these episodes, then hit the subscribe button and turn on notifications by hitting the bell so you receive alerts when each episode comes out. We've helped thousands of listeners get on the path to securing their retirement. Now it's your turn. Let's dive in. Welcome back, everyone, to the Secure Your Retirement podcast. We've got a great episode for you today. I'm very excited to introduce you, or some of you know this voice and this name very well, Tom Siomades. Tom Siomades is a chief market economist that we've had on the podcast. We try to get him quarterly. He's a busy guy, so we're very happy to get him as often as we had to tell us kind of what's going on in the markets, things to be thinking about, a lot of questions that people have. He's able to answer in a nice way. So before I get any further, Tom, thanks for hopping on with me today.
Oh, glad to be with you, and thanks again. And hello, everybody. It's nice to be with everyone again.
Yeah. So, Tom, in his work, he works for a very, very large wealth management firm, and he sees a lot of the different strategies. He's involved with a lot of the big picture type of macro evaluations of what's going on in the economy. So it's nice to kind of check in with him and just say, hey, what's going on and why is it going on this way, and in a simple way. And what's nice is Tom likes to talk in a simple way, so it helps everyone understand it, myself included. So Tom, let's do this. Let's just start off with, we sit here in the middle of 2026, and it's amazing how quickly it's gone by, but there's also been a lot of bumps in the road. So maybe if you could, for everyone, just give us like a 3 or 4 minute synopsis on what all has happened thus far to get us to where we are today.
Yeah, what's interesting, it's eerily familiar in trajectory to last year. If you can imagine that it's feels like it's been 20 years ago. But remember last year we started the year off pretty strong. Then we had the whole tariff nonsense that cratered markets, and then the markets recouped towards the end of the year. Well, same thing this year, right? We start out the year, and I don't think anybody figured that the first thing we would do at the beginning of the year was to grab Maduro and intervene in Venezuela. And by the way, thoughts and prayers out to the folks down there, and they had the nasty earthquake, and hope those guys are okay. But at the end of the day, you had that. The markets kind of rallied. There was a lot of momentum from over the year, and then come the end of February, we intervened and got into this fight with Iran. Ostensibly, it's to prevent them from having a nuclear weapon. Okay, it was supposed to be 4 weeks, then it became 4 months, and markets took a tumble, and instead of tariffs driving markets down this time, it was the price of oil and the fear of inflation down the road, right? A lot of that has been sort of, recouped at this point. I mean, I think we dove down about close to 8 or 9%, and now we're up about 8 or 9% of the year. So we've had about a 20% swing, which is pretty amazing. But it has this same sort of feel as like, you hope that it follows through like last year, because last year we were up about 18%. Now, that said, we can talk, and I know we will in a minute talk a little bit more about Iran, but, at the end of the day, you've had interest rates go up because of uncertainty and fears of longer term inflation. Oil prices have shot up. And then, when oil prices go up, obviously inflation goes with that. And then, people start questioning, is the consumer spending enough? Is it going to lead us into a recession? And then obviously the darlings of the investment world, the AI and the large tech companies have been sort of exposed to this sort of, buffeting. I think at the end of the day, earnings have been really good. The market really wants to march forward, but we've got this cloud of uncertainty that I'm sure we'll talk about in a second, that it's just difficult for people to make a commitment and to say, let's just push through this. And markets have been kind of like, on pins and needles, even though we've punched through record highs. I remember before the Iran thing, if you remember, everyone was talking about S&P 7,000, and we couldn't get there. We couldn't get there. We were like 69, 95. And then all of a sudden, as soon as, the Iran thing was over, or thought the first time it was over, we like popped through 7,000, 7,600. So, I think there's a bias in the market to want to go up, but there's just all of this stuff that's sort of like, these fog in front of us, and you can't see more than about 10 feet, which is kind of causing us a lot of pause and creating a lot of uncertainty for markets out there, at least in the first half of the year.
Right. Yeah, I think that's a good way to say that it is fog because I mean last year the tariff stuff is not fully resolved yet and but now everyone's completely distracted from it by what's going on right now with Iran. So let's talk a little bit about Iran. Like you said, it was supposed to be short term, a couple weeks, and now here we sit 4 months in, and there's been a treaty that seems to be have put in place, but then I was driving in today and on one of the podcasts that I listen to about the market and the world, and you hear about another vessel being attacked as they're trying to get through the Strait of Hormuz. So, tell me what your thoughts are there, and where you see this whole war going.
Yeah, I think when we talked about this last time, and I still have the same reservation. Listen, if I own a tanker and it's full of oil, I'm not sailing. I don't want to sail because I don't want to risk that cargo because, some 15th guy in charge decides to launch a drone at my ship, right? So that's a problem. Now, wanting something and something actually becoming a thing are two different things, right? And so, how many times have we heard Trump say they're going to sign a deal, they're near to a deal, okay, so supposedly they've signed a deal. I don't know why you use the word treaty, which is ironic because that's kind of what I call them. I don't know where memorandum of understanding, what is that, like treaty light? I don't know what that is. So, at the end of the day, you have to look at the fact that the Iranian regime does not want to comply. They want a nuclear weapon. They want to be left alone. They want to do whatever it is that they've been doing that we don't like. Okay. The challenge there is that they'll sign anything, but getting them to behave accordingly are two different things, right? And I think they smell the fact that we're unwilling to go further, right? We're unwilling to commit soldiers on because it's the only way you're going to get these people out of there. They're religious fanatics, right? They're not going to, they'll agree to whatever they need to do to survive, but they're not going to just willingly volunteer and say, yeah, we got free elections, right? So they're going to do what they're going to do. And they know that, we don't have the backbone at this point after 20 years of Afghanistan and Iraq to go send soldiers in there, which probably of these three conflicts, this is probably the one that's the most justifiable, but we can't do it. So the challenge now is that we're playing this nickel and dime thing. They shoot a drone, we retaliate, they do something else. And it just, again, adds to what we just talked about a minute ago. It adds to that level of uncertainty. And at any moment, if they, they only have to, we have to be right 1,000 times, they have to be right one time. At any one time, if they successfully sink a ship or two in the Gulf or in the Strait there, what happens? The price of gas, and oil, which has come down. Well, gas hasn't come down, but oil has come down to about $3. I think it's above when all this thing started. That thing could just as easily shoot up to $100,
Right.
right? And markets are kind of keying in on that. And so, to me, no amount of talk of like, if they don't behave, we're going to blow them up, bleep, whatever. I don't know that that's helping, right? So until the point of such that we actually have stability in that region, which I don't know if that's something that's possible in the near term without escalation, right? Now, I had an interesting thought about, how the Iranians say they want all this money that's being held. I would just use the money that we're holding to fund our war against them and say, hey, every day your balance goes down. The longer it takes you to make peace, the less, the less
Right.
balance, the less we're going to give you back, right? I mean, leverage them. I don't understand why that isn't happening. And by the same token, I wouldn't have never stopped the bombing campaign. I would have said, listen, phones work whether bombs are falling or not. You can call us whenever you want to talk seriously. But I think they viewed the cessation of this war as weakness on our part, which and I have to admit it is. It feels weak. And now we're all of a sudden, trying to like cajole these guys into doing the right thing. They're not going to do that. I mean, these are very, very focused people on what they're going to do. So that, unfortunately, there's no good news from that, because good news would be what? That we send people in there. Nobody wants to see Americans go off and fight
Right.
again, right? Bad news is what? We just let Iran go back to doing what they were doing before. I mean, I guess the only thing is they can't hate us any more than they already did before. So,
Right.
so it's not like there's going to be any more bad blood. So that's kind of where we are with it. I don't see this thing just resolving itself, you know, in the next week or so. This is just going to be a thing that's going to continue to go on. And I'm fearful that we're going to have to escalate it. I mean, I think, Trump's whole threat of the whole bridge and power day thing, just do it. Like, I don't know why Iranian TV is still on TV spewing propaganda. Like, that should have been the first thing that should have been taken off the air. But don't know. I mean,
Right.
that's what's scary to me, is that you don't know. It's like, it's nice to see like three steps. If we accomplish A, then B, then C, we don't have those steps, right? And that's the challenge with these guys. It's like they're not going to go away.
Right. Yeah. And kind of talking about oil, I mean, it's amazing if you think about how important oil is to just making the world go round, not just gas and the ability to go from A to B, but it's the manufacturing, it's the shipping, it's all the cargo carriers, all of that stuff. And I know like the US has kind of started to use up some of those reserves that they had in place, and that's an important thing too. You said it a second ago, and I don't people sometimes think that if the price of oil comes down, gas automatically trickles down right there with it. So can you explain that a little bit? Because that's what people are feeling right now. You hear about oil going down, but the gas pump's still expensive. Why is that?
Well, that's because you have really greedy people taking advantage of the situation, right? I mean, honestly, it's like when you see oil go up on the world market. But by the way, that's another one that's an interesting point for a lot of folks. Is we've heard a lot of talk about U.S. energy independence, and people are like, why are we paying so much for oil and gas? I don't think people realize that, or some people do, but a lot of folks don't. That oil is a global commodity, right? So if Mr. Europe comes to somebody in Texas who's making oil and says, "I'll give you $100 a barrel," the Texas manufacturer is going to sell it to them. He's not going to say, "Well, golly gee, I'm a good American. I'm going to sell it to my U.S. refiner for $50." That's not how it works. So that said, whenever these gas companies see, or the oil companies see prices go up, they're basically buying oil on the futures market, right? And then they realize that, that's a commodity that's going to move up and down, but there's the uncertainty. And you literally will see the guy throw a ladder up and scramble up and change the numbers on the gas thing, right? But oil goes down, and it's like, oh, it takes weeks for it to come off, and this and that, and a lot of times, it's a function of what the futures markets are, right? Because people will buy oil today, but then for delivery whenever, and but fundamentally it's greed, right? At the end of the day, it's like it's easy to justify to people that, listen, I have to keep prices low or high because I don't know when they're going to come down again, so I have to protect my business. And it's a very slow, like, it'll go up in a heartbeat, but it's a very slow, sort of decline. The nice thing about oil, as opposed to other inflationary things, oil and gas, the fact of it is you literally can get back to $2 a gallon gas.
Right.
You can't do that with all the other things in our society that go up as a result of higher energy prices, or silly government policies, right? That's the challenge, right? It's like, you're never going to see $80 sneakers go back down to 40, because you know there's been too much invested in getting them to 80. They don't want to give any of that back.
Right. Yeah. So then let's talk then about inflation and where we think that's headed. We're on this pace of it coming down, and things are starting to look good again, and people are getting excited about interest rates being cut this year, and that hasn't happened, and now there's threats of interest rates potentially going up. We've got a new Fed chair in to replace Powell. Warsh is in, and some would say buddy buddy with the administration. Some would say not. So kind of tell me what you think. And with oil being as crazy as it has been price wise, do you think that that's been influencing inflation too much, or is everything still inflating?
Well, I think it's a huge component of it, right? And I think a lot of times, the academics want to strip out this and want to strip out this thing or that thing when they give you that preferred measure of inflation. Listen, things are getting expensive because energy is expensive, okay, and labor is expensive, okay. I just saw a politician here on TV not too long ago saying that $25 should be the national minimum wage. Well, when you give everybody $25, that's 25 more dollars than they had before to spend. They're going to buy stuff. And unless you manufacture more and more stuff to offset the demand, prices are going to go up. Now, with respect to Warsh, his background is more hawkish. He doesn't like easy money. He didn't like the QE stuff. The problem is that Trump expects him to cut rates. And that's one of the reasons why he pushed Powell out, because they didn't get along and he wasn't willing to cut rates. Warsh's problem is he's on the fence now. With inflation is running nearly double what the Fed wants it to be. I think PCE last week came out at 4.1 or something like that. So they wanted it 2. It's at 4. A lot of that is the oil component, right? We keep being told that oil and gas, when this thing is over, but we just talked about a minute ago. I don't think it's going to be over, right? So if gas can yo-yo, or oil can yo-yo from 70 to 100 and back down again, a lot of the people, like all those things that we talked about, that go into the inputs of prices, not just gas, no one's gonna I mean, how would you feel if you came to work and somebody said to you, well, this week, Mers, I'm going to pay you $1,000, and then next week you come in, I'm going to pay you $500, and then the week after that, I'll pay you $1,250. It's like, no, you're not going to do that because you're not going to go to work there very often, right? And that's the challenge with these people. If you have yo-yoing energy prices, you're just going to worst case it and charge that. And right now, the consumer's supporting it, right? So the challenge here is that, the consumer keeps spending. We're not anywhere near a recessionary environment. And so prices are all across the board are creeping up. But I think psychologically, and I think the difference between gas prices and everything else, like you go to the store, you look at something, it's a little too much for you. Maybe you pick something else up, right? Every time you stop at a corner and you see the gas price and it's got a 3+ handle, closer to 4, you get pissed off. You know what I mean?
Mhm.
It's a visceral reaction. You're like, you know what? Why is it that way? And that's the challenge, right? Because I think at some point in time we get into a psychological deterioration of the consumer. It's, you get exhausted of saying, man, I'm just so sick and tired of paying for everything so much, right? That's the challenge. So it goes from the actual physical sort of actual price to a mental block of where people, and that's when you can have problems with the economy. Now, Warsh's problem, I don't know how he threads that needle, man, because honestly, Trump's going to start yelling at him to lower rates. Because he can say, look, oil is down to $70. Cut rates, cut rates. And he's going to be like, yeah, but we don't see it in inflation because that's what we just talked about, how, your gas price zips up, but it takes forever for it to come down on the back end. That's the challenge that this guy's going to have. And I think, gone, we were what, 2 rate cuts so far this year we're expected. That's out the window. Now the
Right.
market's discounted that completely. So they're not expecting any cuts whatsoever the rest of the year, which I think would be miraculous if we'll actually probably need a rate increase at this point.
Right. Yeah. I think a lot of the argument is to stay steady, or potentially the economy needs rates to go up, which just seems just a lot to handle, right?
Yeah.
So what is the risk then, I guess, if say he does buckle and and he does cut rates, although most people don't think that that's likely unless he does buckle, right? So what's the ramifications there of just cutting rates when the math doesn't make sense to do so?
Well, inflation will continue to, you're going to make money cheaper, right? And if there's inflation's already running hot, it's going to be, you're going to have that much more money chasing fewer goods, right? I mean, it's econ 101 at that point. It's like, inflation's at a minimum not going to go down. B, it'll probably go up, right? Which is a bad thing. So it'll just make things worse, and then it'll just put more pressure on them to actually have to raise rates further. And if you raise rates further at that point, that's just going to kill. Well, one of two things is going to die. You raise rates, it's going to kill business activity. We go to recession. You let inflation run too high and wages don't keep up, you risk an exhausted consumer, and that can also run us into a recession as well.
Right. Yeah. So, recessionary type stuff. I'm hearing more and more about layoffs coming. Regionally here in North Carolina, we hear some of the larger companies doing some layoffs. But even across the country, you're hearing more about it. Now, I know as far as job numbers, they're still pretty good, and we're still bringing jobs in. But do you see us kind of at this tipping point of things could start to point more and more towards potential issues in the economy and jobs and recession type of language coming our way?
Yeah, I think, I don't think we're 50-50 at this thing. I think we're probably, getting close to 50-50 on this because, companies as they see earnings have been good. So there's no pressure from that standpoint, right? The stock market is doing well. I think if we start seeing deterioration in consumer spending, layoffs, things like that, and you start seeing that sort of, like I mentioned a few minutes ago, exhaustion, right? That's the risk you run where now all of a sudden companies are like, hey, our profits aren't there. We need to lay people off. A lot of them will use the whole AI thing excuse that, oh, well, we've made ourselves so much more efficient that we don't need all these people. That's just the con. I think at the end of the day, I think it's, companies use whatever excuses they need to lay people off because if they're profitable, they're not going to lay people off, right? If
Right.
they're if their business is humming along, they're not going to lay people off. You don't want to, obviously you don't want to rock that boat. But I think, the challenge right now is we're in a very fine line, right? And a lot of it is, some of it is kind of self-induced. Like, did we need to do something with Iran? Yes. Did we need to do it the way we've been doing it? I don't know. And that's added a huge, huge unknown, right? And the market wants to run. The consumer's doing okay, but it's all such a fine line at this point because if any of those things fall off, you can have major problems as we get into the end of the year. And I'm not saying we're there. And we're like that, that French guy that walks between buildings with the stick.
Right. Yeah.
We're kind
The
of
the
like that
the
guy,
high
but
rope.
I don't know whether we're just starting that walk or we're ending it. You know what I mean? You can literally, like, if you're 3 feet away from the end of it, you're good to go. But if you're just starting it and it's like, holy cow, look at that rope is really small and that whip
Yeah.
is really
And it's getting
hard.
breezier and breezier up
Yeah.
there. Yeah.
So
Okay, cool. So then, well, let's talk a little bit about more on the positive side of things, which could be turned into a bit of a negative also is, tech and AI continues to lead the markets. A lot of people don't understand, and it's even in my role as an advisor, it's hard to imagine that the markets are up, whatever it is, somewhere in that 7 to 10% range, given all the stuff that we've just spent 20 minutes talking about. And tech is a big piece of that. Now, in the AI space, you just had, or in the tech space, you just had SpaceX do their big IPO, and that was hyped up quite a bit. And then you've got Anthropic and OpenAI probably coming down the road later in the year. But also, there's some of this element of, well, we're in energy crisis, and this is creating a whole nother type of energy crisis in a different way than oil. So, what are your thoughts on tech, AI, the markets, how we're getting kind of still again segmented in the markets because of these companies, fast growing companies, and how does all this play out?
yeah, so I'll talk briefly about SpaceX because I had a lot of people ask me that as it came on. I said, listen, my philosophy, and I would say just from an individual investor, is don't buy into the hype. Okay. Everyone was asking me, hey, should I do this? Should I do? No, just listen. It came out at whatever it came out. It ran up and now it's come back down. And, look, if we're dealing with a company that Elon Musk is involved with, chances are he'll put his foot in his mouth about something. And if you really like it, then wait till it goes back down to whatever it was when the IPO came out, if not lower. If you really understand the business. And my advice to folks is stay away from these individual names because unless you're in that business and really know that business well, aerospace, tech, medical, whatever, and you're buying it for the long term, that's great. But if you're just jumping on board because you heard a bunch of people fluffing this thing up, and it'll be the same thing with Anthropic and all these other guys. Now, what's interesting about this is yeah, there's a lot of hype behind all of this AI stuff, right? But I also think the there's a misjudgment on what the value of these things are. And so, the market is obviously always overly optimistic, right? But until you're slapped in the face with, is this company profitable? Or, is it giving me a decent return on my investment? That's where the challenge exists, right? And so you look at the rest of the market, X tech, and they're just kind of holding water. Why is that? Because of the things we just talked about. The consumer is getting stressed, inflation is high, the economy is not going great, right? And that's kind of more uh, a realistic picture of the real world. And then you got the SpaceXs and the NVIDIAs and all those guys flying all over the place, right? But they're subject to, they need to borrow, right? Because they're not making anything today
Right.
that's useful, that's going to make them money tomorrow, right? They're going to make money 5 years from now. So they got to borrow money. So when you see rates inching up, that impacts them. And that's why you have this yo-yoing effect in those markets, right? Because one minute they're like, oh my God, this is the next greatest thing. This is where all the growth is going to come from. Everyone's piling in. And then they're like, oh my God, data centers are so expensive. Infrastructure costs are so expensive. Let's like what we had last week, right? So that's the yo-yoing effect of this thing. But, at the end of the day, it, the market still believes, right? It's not like everyone's walking in and throwing their hat on the ground and walking out and saying, what, we're screwed here. We're not going anywhere. So it's been sort of this tale of two markets. But I think at the end of the day, if you can get a lot of the other stuff that we just talked about, inflation, energy prices out of the way, we're still primed for a good second half. But again, these things can turn on you in a second, which is really frustrating. And that's what I think that's holding us back right now. I'm surprised actually we're up as much as we are so far this year.
Yeah, yeah, I agree. So then I'll close us out here with two questions of kind of forward-looking types of things. The first being, I guess, what are the things that you're going to be paying attention to the most from now until the end of the year?
So, obviously you can't stop looking at this Iran thing. I mean, it has to be resolved. And it could get worse probably a lot faster than it can get better. So that's going to be with us, right? And what's the impact going to be? Because they could say they want to control the strait. We can say we control the strait. Will the oil flow? And right now it's flowing. As messed up as it is, there's oil moving through there. Okay. But the question is, how how thin is that option? The next thing is we got to keep watching is, listen, if prices remain where they are right now, we actually get an improvement in inflation and we kind of crest. I think we can be in good shape for the rest of the year because that'll give the Fed the cover not to raise rates, first of all. And actually, if we get a good enough improvement in inflation, it might actually get the conversation going again about potentially maybe a cut, right? Now, that said, I don't know. I've heard the government here's got like 12 days before they have to go away or whatever to pass another resolution package.
Hmm.
God knows what that's going to be like. We've also got, elections coming up. That's going to like take up a lot of the oxygen in the room come, third quarter. So, those are all the things that we're kind of looking at right now. I mean, obviously, I love the fact that despite all these headwinds, all I'm thinking is if that headwinds stop blowing, where could we be if we're already at 8% so far with all the nonsense that's going on?
Right. That's kind of leading into my final question for the episode today is, we taught obviously there's a lot of negative things that kind of get focused on in the media, but there's a lot of good stuff going on too that just unfortunately doesn't get as much of the media time. And so I guess tell me, Tom, what are you excited about as we enter into the second half of the year?
Listen, I'm still really excited about the possibilities where a lot of these efficiencies and productivity can come out of this AI. And I'm not talking about the chip makers and the data centers and the nonsense that people use AI for these days, except for the fact that on Father's Day, my family did get me a portrait of a French king with my face on it. So, so AI was good for something, but And I'll show you the picture sometime when I see you. But yeah, it's that's what I'm excited about is where we're going. And frankly, I'm excited about the fact that listen, our country's been around for 250 years, right? And 4th of July right around the corner. And that's pretty awesome. We forget about the fact that we live in the best country in the world. And yeah, we got problems and we could easily get down on ourselves, but fundamentally we're an optimistic people. And I think we're going to be good. So I think we're always innovating. So people that are afraid of the whole AI thing and all that stuff, they're also remember that 90% of the country 150 years ago worked on a farm, right? And then they worked in factories, and we don't do any of those things now. So this will be another change, right? But at the end of the day, I think we should be optimistic, and I think we have a very good possibility if we can get some of these near-term things away from us, like the inflation and the oil and Iran thing. I think we have a possibility to probably have as good a year as we did last year on the S&P, this year. I mean, we could probably easily put on another 10% if we get rid of, some of that other stuff resolves favorably, right? But
Right.
you know,
Yeah. Yeah.
that's where I am for the second half. I think it's going to be okay. I don't think we're near a recession. I think we're going to have a decent second half.
Okay. Well, that sounds good. Well, there you have it, everyone. A couple of thoughts from Tom Siomades. Again, Tom, thank you so much for coming on and explaining things in a normal way, not full of a bunch of economic speak that can be overwhelming sometimes. So thanks a lot for your time today, Tom, and we look forward to having you on again.
Yep, thank you, and happy 4th.
If you would like to find more information about Peace of Mind Wealth Management, we invite you to visit our website at pomwealth.net. If you go to the contact page and contact us, we'll send you a free copy of our book, The Peace of Mind Pathway. It lays out our process from beginning to end. Please visit our website.
For more retirement tips, check out these videos. Also, if you find them valuable, please subscribe to our YouTube channel and give us a like.